Imagine an investment vehicle that packs a punch of stability and high returns. That's the FGD Dividend Yield for you. FGD, or First Trust Dow Jones Global Select Dividend Index Fund, is an exchange-traded fund that offers investors a unique blend of stability and potential high returns. It does this by focusing on a specific type of investment, dividend-paying stocks. These are shares in companies that distribute a portion of their earnings back to shareholders, typically on a regular basis. Now, you might be wondering why dividends? Well, dividends serve as a steady stream of income for investors, and in times of market volatility, they can be a much-needed lifeline. On top of that, companies that pay dividends are often more mature and financially stable, which can bring a sense of security to your investment. The FGD dividend yield is essentially the annual dividend payment an investor receives from the FGD, expressed as a percentage of the ETF's current market price. So if the FGD is worth $100 per share and pays out $5 in dividends over a year, the yield would be 5%. What makes the FGD dividend yield so attractive is its potential for high returns. The FGD specifically targets companies from around the world that have a strong track record of paying high dividends. This means that not only do investors receive a steady income from their investment, but they also have the opportunity to benefit from the growth of these companies. But it's not just about the money. Investing in the FGD also gives you a piece of some of the world's top companies, spreading your risk across different regions and sectors. This global diversification can help protect your portfolio from the ups and downs of a single market, making the FGD a valuable addition to any investment strategy. In the world of investments, the FGD dividend yield is a game changer, but why is it so special? Stay tuned to find out. FGD dividend yield is not just another investment term, it's an essential tool for savvy investors. But what exactly is it, and why is it so important? Let's break it down in simpler terms. The FGD dividend yield is a financial ratio that shows how much a company pays out in dividends each year relative to its share price. In the investment world, it's a method used to evaluate the return on investment of buying shares in a company. It's calculated by taking the annual dividends per share and dividing that by the price per share. Imagine you're an investor. You've got your eye on a company, and you want to know if it's a good investment. You could look at a bunch of different factors, but the FGD dividend yield provides a good snapshot. It tells you how much bang for your buck you're getting from your investment in terms of dividends. If the FGD dividend yield is high, it means you're getting a lot of dividends for each dollar you've invested. On the flip side, a low yield could indicate that the company isn't returning much to its shareholders. But remember, a high yield isn't always a good thing. It could also mean that the company's share price is falling. So as an investor, it's crucial to understand what this yield means and how it can influence your decisions. It's not just about looking at the numbers, but also understanding the story they tell about the company's performance and future prospects. Now you might be thinking, okay, I get it, but why should I care about the FGD dividend yield specifically? Well, that's a great question. The FGD dividend yield is unique because it focuses on companies from the First Trust Dow Jones Global Select Dividend Index, an index that features some of the world's most prominent dividend-paying companies. Understanding the FGD dividend yield can be your key to unlocking profitable investments. But how does it stand out from the rest? Let's delve deeper. The FGD dividend yield is not your average yield. It brings unique features to the table that sets it apart. One of the standout features of the FGD dividend yield is its focus on high dividend companies. This isn't just about picking any company that offers dividends. Instead, FGD meticulously identifies those companies that consistently give high dividends. This approach ensures a steady stream of income for investors and often leads to a more stable investment when compared to other market options. But the FGD dividend yield doesn't stop there. It also offers a level of diversification that is hard to come by in the market. When you invest in FGD, you're not just investing in one or two high dividend companies. You're investing in a myriad of them. This diversification not only spreads the risk, but also provides a broader exposure to the market. This means you're not putting all your eggs in one basket, but rather investing in a basket full of high-performing eggs. Another unique feature of the FGD dividend yield is its global reach. While many funds focus on a specific region or country, FGD expands its horizon to include high dividend companies from all over the world. This global focus allows investors to tap into the growth of international markets, providing an opportunity for higher returns. Furthermore, The FGD dividend yield is also known for its robust structure. It is based on a well-thought-out investment strategy that aims to balance high returns with reasonable risk. This carefully crafted structure makes it a reliable choice for investors looking for a steady source of income. Finally, the FGD dividend yield is also renowned for its transparency. All the information regarding the fund's holdings, performance, and costs are readily available for investors. This openness allows investors to make well-informed decisions about their investment. The FGD dividend yield is truly one of a kind. But how can you make the most of it? Keep watching. The FGD dividend yield isn't just about understanding, it's about leveraging it for maximum gains. Let's delve into how you can make the most out of it. First off, knowing your investment goals is crucial. Are you a long-haul investor looking for consistent income, or are you a short-term trader aiming for quick gains? Your approach to the FGD dividend yield will depend largely on your investment horizon. Long-term investors can ride out market volatility and reap the benefits of compounding dividends over time. Short-term traders, on the other hand, might focus on timing the market to capture dividend payouts. Next, consider reinvesting your dividends. This is a powerful strategy that can significantly boost your returns over time. By reinvesting, you purchase additional shares of the FGD ETF, which in turn will generate more dividends in the future. It's a virtuous cycle of growth. Also, don't overlook the power of diversification. While the FGD dividend yield might be enticing, it's important to balance your portfolio with other investments. This helps mitigate risk and smooth out returns over time. Lastly, stay informed. The financial world is dynamic, with factors such as economic trends, market conditions, and company performance all influencing dividend yields. Regularly reviewing your investments and staying abreast of market news will help you make informed decisions and adapt your strategies as needed. Now let's talk about timing. While it's impossible to perfectly time the market, being aware of the ex-dividend date, that's the date by which you need to own the ETF to receive the next dividend, can help you plan your investment strategy. Just remember, buying solely for the dividend can backfire if the ETF's price declines more than the dividend payout. In conclusion, the FGD dividend yield is a powerful tool in the investor's toolkit. It offers potential for steady income and growth, particularly for those who are patient and strategic. Using FGD dividend yield effectively can be a game changer for your investment portfolio. But remember, every investment comes with risks. Like any high return investment, the FGD dividend yield comes with its own set of risks and considerations. So, let's delve right into it. The first thing that might spring to mind when considering the FGD dividend yield is market volatility. Like a ship on the high seas, the market is subject to the ebb and flow of global economic currents. It's worth considering that dividend yields can fluctuate, sometimes dramatically, in response to these shifts. This can create a certain level of uncertainty for investors who prefer a steady, predictable return on their investments. Now, on to the next risk. It's a common saying among investors that you shouldn't put all your eggs in one basket. In other words, diversification is key. While the FGD dividend yield may look attractive due to its potential for high returns, it's essential to balance your portfolio with other investments. This investment strategy can help to mitigate risk by spreading it across a variety of asset classes and sectors. Another consideration is the potential for changes in dividend policies. Companies can and do change their dividend policies, which can affect the yield of an FGD. This is particularly important if you're relying on these dividends as a source of income. And finally, let's talk about the importance of research. Before diving into the FGD dividend yield, it's crucial to do your homework. Understand the companies that make up the FGD, their financial health, and their potential for growth. This understanding will equip you with the knowledge to make informed decisions about your investments. So there you have it. Yes, the FGD dividend yield can offer attractive returns. But like navigating any financial waters, it involves risk. The key is to navigate these waters with caution, armed with the right knowledge and a diversified portfolio. Investing in FGD dividend yield is not without risks, but with careful planning and informed decisions, it can be a powerful tool